Question number 4. A Limited acquired 2000 equity shares of rupees 100 each. 100 means it's a face value. 100 each in B Limited on 31st March 2017. Yeah, so it is nothing but 31st previous year last day is nothing but current year first day. That is nothing but 1/4/2017, such a way. The summarized balance sheet of two companies as on 31st March 2018. That means after 1 year, were as follows. So they have given equity shares 8 lakh and 2,50,000. So this is what our concern. So 2,50,000. 2,50,000 was there. So reserves and surplus consist of 3 lakh and 50,000. So subsidiary companies we have to analyze. Profit and loss account 1 lakh and 1 lakh. Creditors 2 lakh and 50,000. Assets consist of fixed assets 7 lakh and 2 lakh 50. Current assets 4 lakh and 2 lakh. And 2,000 shares. 2,000 shares in B Limited at cost 3 lakh. So I repeat, it is a 2,000 shares. But here how much was there? 2,50,000, sorry, 2,500 shares of rupees 100, 20 if you cut, 2,500 shares are there. Imagine. B Limited has a credit balance of 50,000 in reserves and surplus and 20,000 in P&L when A Limited acquired shares. That means on the date of acquisition, this was the opening balance, and the difference in increase in reserves we have to take into the fluctuations post acquisition. B Limited and A Limited acquired in B Limited. Issued bonus shares in the ratio of 1 for every 5. 1 for every 5 held out of the profit earned during 2018. held out of what? Held out of profit earned during 2018. That is out of current year profit, they have declared the bonus. This is not shown. This is not shown in the above balance sheet. That means here bonus adjustment was not done. Bonus adjustment not done. That's the meaning. So we have to include that bonus. So after including the bonus, so what is the percentage of holding? We have to compute. So 1:5. 1:5. Next, continue. That's it. Only bonus issue. Prepare consolidated balance sheet of A Limited and its a subsidiary as at 31st March 2018. Give all necessary workings. So here only adjustment was bonus issue. Step number 3 and appropriation. So step number 5 minority interest. Step number 6 cost of control will come. So step number 7 intercompany workings is nil. Yeah. So that's how it has to be. So very simple problem. Let's go. Yeah. Solution. Let's go. Question number 4, page number 24, solution. Yeah. To start with, so what is the step 1? Date of control. So this is working notes. So first step 1, date of control, which is 31st March 2017, which is nothing but previous year last day, which is nothing but current year. That means it is also control is acquired during the period. Sorry, beginning of the year. So that is beginning of the year. Beginning of the year. So then step 2, what we call it as shareholding pattern. Shareholding pattern. So in a shareholding pattern, so first is which company? A Limited, which is holding company. A Limited. So which is my difference? So 2000 already we have plus. This is 2000 out of 2500. Just imagine. Yeah. So now bonus issue is how much? Bonus issue is 1 for every 5. So 2500 into 1/5, which is 500 shares are bonus issue. Yeah. So therefore, out of bonus into Out of bonus, so whatever holding company share, which is nothing but this itself, you get 80%. Either you can apply directly 80% or into 2000 divided by 2500 shares, you will get 400 shares. You will get 400 shares. So that's what here, 400 out of 500. So therefore, in total, it is 2400 shares total, including bonus issue, including bonus. So always the shareholding pattern has to be tested on the date of consolidation. So out of 3000, so therefore which amounts to 80%. So therefore non-controlling interest, so it is a balancing figure which is 20%. Total 100%. Next, step number 3, analysis of profits of subsidiary B Limited. Analysis of profits of subsidiary B Limited. Subsidiary B Limited. Out of that, first one we have to check out EA, General Reserve. General Reserve. General Reserve. So closing balance as per balance sheet we have 3 lakh, but this has to be analyzed in on the date of acquisition. On the date of acquisition, which we call it as pre, which is given in your problem. It is 50,000. It is 3 lakh is correct. Sorry. I have taken only. I'm sorry. I have taken instead of it is not 3 lakh. It is 50,000. So on the date of acquisition, it is 50,000. So therefore, what is current year? It is nil. It is nil. So therefore, completely this 50,000 is what? Capital profit. So this is nil. This is capital profit. Next, let us go to the P&L. Sorry, check out, is there any revaluation? No, in this problem nothing. So therefore, I am directly jumping to profit and loss account. Profit and loss account. So how much is profit and loss account? 1 lakh as per balance sheet. Subsidiary balance sheet 1 lakh. Out of that, what is on the date of acquisition? On the date of acquisition, that is nothing but pre-acquisition. So given in your problem, it is 20,000. It is 20,000. So that means what is current year post-acquisition? That is what we call it as post-acquisition profit. 80,000. Post-acquisition how much? 80,000. But out of that, my dear friends, so clearly they have mentioned out of post-acquisition, company has declared bonus issue, correct? Less bonus issue, which is 2,50,000 into 1 by 5. That means 50,000 we would have utilized for bonus issue. Na? They clearly said adjustment was not made. Therefore, what is your balance? 30,000. It would have been how much? 30,000. 30,000. So therefore, this 20,000, what we call it as capital profit, this is what we call it as revenue profit. Revenue profit. So they have clearly said out of post-acquisition, they have declared the bonus issue. Otherwise, usually bonus issue I would have taken accumulated profit. Got it? That too out of general reserve. Yeah. So that's it. No revenue, no change in fair values, nothing. So therefore, directly we go to step number 4. Step number 4, what we call it as apportionment of profits. Apportionment of profits. Apportionment of profits. So first is, so here only general reserve is there. So therefore here only capital profit. So revenue reserve, nothing is there because is there. So just for your information, I can write revenue revenue reserve and revenue profit. So here to start with, first is general reserve. General reserve capital profit is complete 50,000. Complete 50,000 is a capital profit. Revenue reserve is nil. So then P&L, profit and loss account. Profit and loss account. So capital profit we have 20,000 and revenue profit we have 30,000. So that's it. No other reserves. So therefore total it is 70,000, 30,000 less share of non-controlling interest at 20%, which amounts to 14,000 and 14,000 and 6,000 and 6,000. Therefore, A limited shares. Therefore, it is a A limited share, which is 56,000 and 24,000. So this 56,000 will go to step number 6, cost of control. This will go to step number 8, reserve for CBS. So this will go to step number 5, this portion. Then let us go to step number 5. Step number 5, non-controlling interest. Non-controlling interest at 20%. At 20%. So first is share in capital. So here equity capital. So therefore including bonus, which is 3 lakh into 20%, which amounts to 60,000. 60,000. Add capital profit. Capital profit, which amounts to 14,000. Revenue profit 24,000. 24,000. So here sorry, not 24, I'm sorry, it is 6,000. 6,000 these figures. Yeah. So therefore what is total NCI for CBS? So here there is no unrealized profit, no adjustments. So therefore it is completely 80,000. So this will go to your NCI, so in a balance sheet. Next, step 6, cost of control. Cost of control. So to start with, so here also fair values of assets, non-current asset measurement, this is all not available. So therefore directly we will go with liability route of measurement. So therefore here to start with, so cost of investment. Cost of investment. Cost of investment given it is a 3 lakh. 3 lakh. So yes, less pre-acquisition dividend wrongly credited to P&L nil. So therefore net cost of investment is 3 lakh. So less share of net assets. Share of net asset. So under that, my dear friends, share of net assets first is share in capital. So including bonus, it is 3 lakh into 80%, which is 2,40,000. 2,40,000. Capital profit, I believe it is 56,000. Capital profit 56,000. So in total, it is 2,96,000. 2,96,000. So therefore, what you get is a goodwill.
4,000.
Goodwill 4,000. Goodwill 4,000.
Yes, sir.
Next, step number 7. Step number 7, intercompany. Intercompany owings nil. In this problem, nothing is there. So that is no debtor, creditor, no BRBP, no intercompany borrowings, no interest. So no URP also. So therefore, all 5 skip. Next, note number 8 or step number 8. Step number 8, which we call it as reserves for CBS, consolidated balance sheet. To start with here, so what we have, so first is general reserve, profit and loss account.
Yes.
Yeah, profit and P&L account. So now to start with my difference, so first we required A limited balance. A limited balance.
Yes, sir.
So as per balance sheet, as per balance sheet. So as per balance sheet, A limited, how much is their general reserve? 3 lakh. 3 lakh, and profit and loss account 1 lakh. So now add share from what? Share from B limited. Share from B limited from step number 4. So revenue profit. So it amounts to how much, my difference? 24,000. 24,000. So that's it, no adjustment. So total for CBS 3 lakh and 1,24,000. 3 lakh and 1,24,000. Yeah, so that's it. Now let's go required solution. Required solution. Required solution. Consolidated balance sheet of A limited and its subsidiary B limited as on 31st March 2018. To start with, assets, note amount. Assets, note and amount. Yeah. To start with, so in assets by default, so it's a small balance sheet, you can draft it. So here in assets, first fixed assets is given, but we have to present in the form of Schedule 3 format. So therefore, first we have to write non-current assets. Non-current asset. Under non-current asset, so first one is property, plant and equipment. Yeah, so here, so we don't have any adjustment, therefore you can give total in one shot. So 7 lakh plus 2 lakh 50, it is a 9 lakh 50,000. Yeah, so in exam and all, so both company you have to add, therefore note you have to give. So here we can write it in one shot. So next, investments are cancelled, therefore other financial assets, nothing is there. So that directly you can go with current assets. Current assets. So current assets, so total you can give 6 lakh. Total you can give 6 lakh. So no adjustment, stock reserve, nothing is there. So therefore you can just combine and total it. So that's it for this. So then we can go with equity and liability. Equity and
Yeah, goodwill.
yeah. So that means here intangible asset, intangible asset hyphen goodwill, goodwill 4,000. Very good, Arun. Yeah. So equity and equity and liability. Under that, first is share capital. Sorry, shareholders fund. Under shareholders fund, so first is share capital. Yeah, since I have already shown in a first problem how to present that note in exam, this one in main problems, this one you have to present that opening, changes and closing. So here, so not required. So directly I will write only holding company's capital 8 lakh. 8 lakh. 8 lakh. If it's a full-fledged problem when we solve, so that time you have to write that opening capital how much, changes 0, nil and closing balance you have to give that split. So share capital. Next, other equity. Other equity, note 1. So then non-controlling interest. Non-controlling interest. So working note number 5, 80,000. 80,000. So then do you have any non-current liabilities? Nothing. So we have number 2, current liabilities. Under current liabilities, financial liability. Financial liability. Under financial liability, trade payables, creditors. Total 2 lakh plus 50, 2 lakh 50,000, no split. Yeah. So that's it. So under this, what I supposed to give? Only one notice. Other equity I supposed to give. So notes. Note number 1, other equity. Note number 1, other equity. So other equity, what is the position we have written, my dear friends? So first is, if any, capital reserve, capital. So here it is, particulars, capital reserve. So P and L, or you can call retained earnings, other equity, total. Yeah. So here either you can copy, you can write one on one, or you can directly copy. So first is general reserve, general reserve. So how much is as per step number 8? General reserve, how much is step number 8? 3 lakh. 3 lakh. Sorry. 3 lakh has to be written other equity. Yeah. 3 lakh you have to write in other equity. Next, profit and loss account. Profit and loss account. So it is nothing but opening balance. So that split completely right, opening balance share from subsidiary. So in a previous problem I presented in detail. So here, since in step number 8 I already shown it, I'm copying the balance from there directly. Profit and loss. So how much is P&L balance? It is 1,24,000. 1,24,000. So in this problem there is no capital reserve. Instead that goodwill has been appeared. So therefore that's it. So final total. So total. So there is no URP, no adjustments, nothing. So it's a just a floating blind problem. So that's me. So nil. So 1,24,000, 3 lakh. So total 4,24,000. So go and copy 4,24,000 to your reserves and surplus other equity. 4,24,000. Check out the balance sheet. Is it 15 lakh
54,000.
54,000? 15 lakh 54,000. Is it tallied? $15,54,000. Is it tallied?
Yes. Yes, sir.
Yeah.